Smug smile. No, they're not.
No, they're not.
Nobody would do that. Nobody would sell you gold and trade you dollars for it. just remember that. Just hold on to it.
Remember for the...
Remember it. Okay, go. Finish up.
No, that's the end of the clip because
that's the end of the clip.
We stopped it there because we got the next slide because we thought it was interesting that he said that.
Yeah, nobody would be stupid enough to sell you their gold for your cash. Really. Interesting. Oh, by the way, on the prediction, Bernanke didn't print more money, by the way. The market did go up huge on Friday. And maybe there are people actually selling gold for cash. Maybe gold line. Oh, wait a minute. Where'd you find this? Euro-Pacific Precious Metals. I have always recommended that investors allocate at least 5% of their portfolios to physical precious metals. Peter Schiff, interesting. So are you suggesting that Peter is trading cash for gold when gold's supposed to go to up and up? What's it supposed to go to? 5,000?
5,000 is his latest prediction.
5,000. When it's what? It's 1,800 now?
Yeah. Why is he selling any gold?
Why would you sell gold? You would just be hoarding it. Well, you wouldn't be selling it to other people in exchange for their cash that's going to zero.
He's doing it out of the goodness of his heart.
As like a charity.
Yes. It's for their benefit.
And he said, well, there is a video clip as well that says why he started the company. But I think the reality is, I think it's extremely interesting that you make a comment like basically saying exactly what all these companies are doing, and he comes back and says no one is doing that. And I don't. It's so disingenuous.
Everybody's doing that.
How are you buying it? You know, I mean, no one's trading food and things like that for it. You have to purchase it with cash, and that's exactly what he's doing right here.
When gold finally does crash someday, you think it's going to be Euro-Pacific Precious Metals, or do you think we're going to have to change the name?
Going back to capital.
It'll be whatever is hot at the time.
Hi, I'm Peter Schiff, and welcome to the Euro-Pacific Precious Metals website. You know, I've always recommended that my clients keep at least 5 to 10% of their portfolio in physical precious metals. Gold is real money, and physical precious metals historically have been the ultimate protector of wealth and purchasing power. Unfortunately, paper currencies have not fared nearly as well. You see, the current policies that are trying to stimulate the economy are only stimulating government. We're growing government at the expense of the economy. And the bigger the government gets, the weaker the economy becomes, the larger the deficits become, and the more pressure there is to try to print more money and inflate our way out of problems. Inflation is not only a possibility, but an inevitability. The best way to protect yourself against that is not to save the currency that's being inflated, to hold something real, to hold something that the U.S. government can't print, and that's gold. What prompted me to start my own company was hearing the stories of many of my brokerage clients of the rather significant markups that they were paying to buy physical precious metals. What happens is a lot of precious metals companies end up advertising bullion, but ultimately end up convincing their clients to purchase numismatics instead. And I think the main reason for that is that the markups in bullion coins are relatively low, but the markups in numismatic coins are outrageous. Sometimes the markups can be 10, 20, 30, 40%, which means if you turn around and have to sell your coins, you need the coins to double in value to break even. When you're buying a rare coin, you're not really making a precious metal investment. And so I think that people need to stay away from rare coins if they want to buy gold and silver. We're going to help our clients protect themselves from inflation and a declining dollar the best way possible by buying physical precious metals, physical gold and silver, bars and coins, and you can be assured that when you're buying physical precious metals that you're going to get what you pay for and it will be delivered in a timely and an efficient manner. You have my word on that.
Here's what you can buy. Gold, silver, platinum, palladium.
Pretty. Is there one with a picture of a shoe?
A picture of what?
A shoe. I mean, if I can get different decorative things, it's probably what they are. It's decorative.
Decorative little trinkets of gold.
Gold is money.
Gold is money.
Gold is money.
So when I made the comment that people are trading their gold for cash, the same people that are saying gold is a great investment, we have a great example right here with Peter Schiff's face on it right there. Denying that it happens. Who's doing that? Well, Peter, you are. Why would you trade your gold for cash if gold's going to triple and double again and cash is going to zero? It makes absolutely no sense at all. As a matter of fact, you shouldn't have any cash at all. You should just own gold. Gold, gold, gold.
And you shouldn't have, you shouldn't have international stocks. You shouldn't invest in any bonds. You shouldn't. Obviously, he doesn't like the U.S. ever, so you shouldn't hold the U.S. So you should. If gold is the only thing going up, that's all he should be holding. But that's not all his company sells. I mean, they have funds. They have international funds. They have international small and value funds. So it is interesting to hear.
Do you think it's easier to sell gold right now than an internationally, globally diversified portfolio? Because gold might be a little hot right now.
Yeah, it's pretty hot.
Gold. Oh, look at now. You found out, Dan. You did a little bit more research on how you can buy gold through Mr. Schiff.
Yeah, apparently through his company, he has a exclusive right with to sell. He's an exclusive dealer in all 49 states of the Perth Mint Certificate Program. And basically what the Perth Mint is a mint in Australia that mints quite a few different products. So basically you're buying a stock certificate saying that you own this much gold or silver, whatever, in Australia. Interesting enough, there's a couple blogs out there where people are trying to sell these Perth certificate or cash these Perth certificates in and get the gold. And the post back saying it's too expensive to mint that gold and ship it to them, so they prefer that you cash them out.
So you actually never really end up having any gold.
So you don't have any physical gold, which is what he told you to have, is physical gold. Do you ever get to see your physical
Because gold
gold?
is money, but apparently it costs
money.
you big commissions and transaction fees to get your money.
Or you have to pay shipping and handling.
Yes.
A restocking fee.
And you have to insure it because, you know, when it goes through UPS, it's
Yeah.
not insured and, you know. Gold. Oh, look at Goldline and all the people out there selling gold. That's exactly what they're
go
doing.
ahead. I mean, people are accumulating gold. They use it to buy the things that they need. But if you understand
What?
money
What?
and gold, you save your gold and you spend
lives
your
in the
paper.
Wild Wild West.
That's what I'm doing. That's what my clients are doing at Europe Pacific Precious Metals. We are holding gold and we are spending paper. Now, obviously, you have to spend some gold. You got to eat. You got to live. You got to drive your car. But if you want to put money aside to spend it tomorrow, to spend it next year, to spend it in 5 years, what are you going to save? Are you going to save U.S. currency? No, you can't. You got to save something of intrinsic value. And gold isn't becoming money. It's always been money.
Are
The
you
founding
hedging-
fathers made it money.
Understood. Are you hedging your bet, Mark,
Gold
on gold at all? Do you have any percent of your portfolio in gold?
If you build a globally diversified portfolio, you already have gold. You have mining companies, you have distribution companies, you have all kinds of gold. There's no reason to double down and bet and leverage yourself up on it.
no.
And gold hasn't been a great store of money. After inflation and taxes, gold has been a terrible
No, that's not
investment.
true. What are you talking about?
It is true.
Gold has been
It's
an
only
excellent store of
4%.
value.
Hold on.
4%
Peter, go
after
ahead.
inflation of 3 and taxes
Hold
of
on.
28.
Again, it
because you
depends
don't
on your
get
time frame,
against
guys.
it.
You could pick a piece of any time frame in the past 100
Look at
years
the-
to prove either one of your
Well,
points.
look at the price of the Dow. Last week, the Dow Jones was worth less than 6 ounces of gold. 10 years ago, it was worth 43 ounces of gold. This is a huge bear market in stocks versus gold. In 1970, gold was $35 an ounce. It is $1,800 an ounce. You're telling me that that hasn't kept pace with inflation, that people haven't preserved their value? In fact, look at the price of oil. Oil is cheaper today than it was 30 or 40 years ago if you're paying for it in gold. It's more expensive if you're paying for it in dollars, but not if you got real money.
Okay, guys, we're going to bring a panel into this discussion. We know
Okay,
what Wall
let's stop
Street
it
wants
there.
the Fed to do, but
Okay,
what's
so Lauren says in 1970 you couldn't buy gold. Interesting. Don't bring up the facts, Lauren. That's bad.
Beautiful. Did you see Beautiful Life?
Yeah, Beautiful Life.
Yeah.
Beautiful Life. Historically, inflation is at around 3%. T-bills, the risk-free rate, at about 3.5 to 4%, and large U.S. stocks at over 9.8%. Microcap stocks come in historically from 1926 at about 12%, and small value stocks come in at the ballpark of about 12 to 13%. So if you want to deal with inflation, remember this: gold and stocks have about the same standard deviation of volatility. That's 19. They are both extremely volatile in the short run. So if you're willing to take on that much volatility, you want asset categories in your portfolio that offer the highest expected rate of return given the longest period of time, because no one can predict accurately in any small period of time what's going to do better, whether it's stocks or gold. In addition, if you build a diversified portfolio, you already own gold in your portfolio. Because we own, for example, 12,000 equities in over 40 countries all across the world. You have mining companies, you have storage companies, you have bullion companies, you have all these companies that are already in your portfolio. You don't want to double down. But you're selling product and you have to earn commissions. You're going to push whatever is hot. And this is the same problem that all advisors face, or all investors face, when they decide, are they going to work with the fiduciary who does not have a vested interest to push one or another? We could load up our portfolios tomorrow with 30% gold ETFs. It wouldn't be prudent, and it would hurt investors long term, but it might be easier to sell.
And I think it's also during high inflationary times, I think it's interesting when you look at, 5-10 year periods and you look at stocks versus T-bills and versus gold during high inflationary times. Stocks are basically, they keep pace with the inflation increase. I mean, they're the ones that outpace inflation historically. If you look all the way back to 26, all those rolling time periods we've looked at, those are the ones, stocks are what keep pace. I mean, they're the ones that keep you ahead of inflation. And I think that's interesting to look at as well. They have to build in the price.